Hello everyone, welcome to Cloud Expat Tax. In this tutorial, we're going to show you how to complete Form 2555, which is Foreign Earned Income Exclusion. If you are an US expat, this tutorial will definitely help you in completing Form 2555 for the tax year 2019. US citizen and a green card holder can claim up to $105,900 of foreign source income on the tax return for the tax year 2019 if he maintained a tax home and lived abroad. So how do you complete Form 2555? So the first thing would be your name over here and your social security number. So the part 1 is the general information. You need to enter your foreign address. Then you move to your occupation. Then you need to enter your employer name. You've entered as ABC Limited. Your employer US address over here on line 4A. On line 4B, you would enter as the employer's foreign address. Line 5 states your employer type, so it could be a foreign entity, it could be a US company, it could be self, it could be foreign affiliate of a US company or others. In our case, this is a US company. Our taxpayer is still on a US payroll. You would enter as US company. So if a taxpayer is working for Bank of UK, you can enter as foreign entity. If it's a US company that has a subsidiary in the UK, you would click box D, which is foreign affiliate of a US company, and box E would apply for others. So coming to line 6A, if you have previously filed Form 2555 or Form 2555 Easy, enter the last year you have filled a form. So our taxpayer came to the UK on 2018, so we have entered as 2018. Line 6B says if you haven't previously line 6B says that if you haven't previously filed Form 2555 or 2555 Easy to claim either of the exclusion, check here and go to line 7. Line 6C says have you ever revoked the exclusion? That would be no. Line 7 asks of what country you are a citizen or a national. This would be US citizen. Line 8A says did you maintain a separate foreign residency for your family because of adverse living condition at your tax home? In this case, we are selected as no. Line 9 says list of the foreign home country. Line 9 says list your tax home during the tax year and the date established. So a taxpayer established his tax home on June 1st, 2018. So that's what we're going to enter over here. Coming to part 2. Part 2 applies if a taxpayer is claiming foreign earned income exclusion using the bona fide residence test. If taxpayer can either claim a bona fide residence test or he can claim foreign earned income exclusion through a physical presence test. Just for example, we have filled both these parts. You only need to complete one part of this. So if you are qualifying through the 330-day test of PPT, you need to complete part 3. If you are a US citizen, you should complete part 2. If you are a US citizen or a green card holder, you can complete part 3 as well, but green card holders should complete part 3, not part 2. So coming to line 10, the bona fide residency period begins on June 1st and it says ended. In our case, it's not ended, so we enter as continues. Line 7 says the kind of living quarters in a foreign country. Taxpayer is living in a rented accommodation, so we have selected B over here. So line 12A says that did any of your family live with you abroad during the part of the tax year? We have selected as no. If your family did live with you, you should select yes and you should mention the period over here. So line 13 says have you submitted a statement to the authorities of the foreign country where you claim bona fide residence and that you aren't a resident of that country? So we have selected this no. So if a taxpayer is living in the UK and he has submitted a statement to the tax body over there, which is HMRC, that he's a non-resident and shouldn't be taxed, then it would apply yes, but the consequence of that would be that he won't be eligible to claim bona fide residence test. So in our case, he hasn't done that. He's paying taxes in the UK, which is why we have selected as no. And coming over here to 13B, are you required to pay income tax to that country where you claim bona fide residency? Of course, so that's what select as yes. Coming to line 14 would be if a taxpayer is coming back to the US for a vacation to meet his family for whatever reasons, you need to enter the date arrived in the US, and the date he left the US. So he is not coming for any business purpose, so we will select this as 0, and any income associated during this time should also be 0. So if he's coming for business purpose, you would have to do the tax computation of his salaried income, and you would have to divide that income based on the number of days, working days in the US, and enter this income. That income will not be eligible for foreign earned income exclusion. In our case, he is only coming to meet his family, so we have entered as 0. Coming to line 15, list any contractual terms or conditions relating to the length of an employment abroad. So this you can either enter as employment, or in our case, he's been sent on assignment by his employer for 2 to 3 years, and that is why we have entered as 2 to 3 years. The type of visa he has entered into the foreign country, in our case it would be UK tier 1 visa, which is a work visa in the UK. So did your visa limit the length of your stay or employment in a foreign country? This would be no. Did he maintain a home in the US while he was abroad? This would also be no. If this is yes, to enter your address and the names of the occupants along with the relationship. So you can enter your address over here and enter the name of the occupants, and for the relationship it should be unrelated. Coming to part 3, so this is optional again. You either need to fill part 2 or part 3. Just for the demo purpose, I've shown both the tests. So line 16 says the physical presence test is based on the 12-month period from. So this would be the entire 365-day period. This period could be the current tax year or the next tax year or the previous tax year, but you have to make sure that this is a 365-day period. In our case, he is abroad for the entire duration, so we have entered the entire 365-day period starting as a calendar year. So line 17 says as the principal country of employment during the tax year. This would be United Kingdom. And line 18 would be if he is physically present in the US. So in our case, he is not come back to the US. If that is the case, you need to enter physically present in a foreign country for the entire 12-month period. If he has come to the US, you need to enter the date arrived and the left, and you need to make sure that the total number of days abroad is more than 330. The total number of days abroad should be more than 330. If it's less, then he's not meeting the test. And this 12-month period could be any 12-month period, as I said before. So if this is his first year he's going abroad, it could start from that date. The starting date could be that day, and the ending date should be at the end of the 365-day period. Vice versa, if he's coming back to the US, that the date of coming back should be over here, and you can go back 365-day period, which could be in this tax year or the previous tax year. The starting date would be over here. So the part 4 is where his foreign earned income exclusion is calculated. So coming to line 16 would be his total salary. Line 20, if he's performed any personal services. If he's getting any income from partnership, you would enter on line 20B. If there are any benefits given by his US employer in terms of housing and meals, that would come on line 21A, 21B. If he has any mode of transport given by his employer, would come in 21C. Apart from that, any allowances for his family, education, home leave would come on line 22. Other foreign earned income would come on line 23. And if you add all these lines, they should total up on line 24. So based on section 119, the amount of meals and lodging is excluded on line 25. So whatever employer provided lodging and meals at the convenience of the employer is excluded from the foreign earned income exclusion. So this would total up to line 26, which is your foreign earned income. In our case is $130,000. The same total would come on line 27, which is $130,000. Part 6 would be for the taxpayers claiming foreign housing exclusion or deduction. So in our case, our taxpayer is paying $40,000 as rent in the UK. So you would enter the name of the city and the country on line 21A. Based on the limit, every city on this planet has a limit or a threshold given by the IRS on its website. So for London, 29B is 69,200. The smaller of that comes on line 30, which is 40,000. Coming to line 31, he has been in the UK for 365 days. So we're going to enter 365 over here. And based on that, so 16% of 105,900, the maximum foreign earned income exclusion is 16,944. So that would come on line 32. And if you subtract line 30 and minus 32, you would have an amount of 23,056 on line 33. It says subtract line 32 from line 30. So yeah, line 32 is actually lesser than line 30, but that's the calculation. Line 33 is 23,056. So line 34 is enter employer provided amount. So his salary is $130,000. Line 35 would be just enter 1, you multiply 1. So line 36 is the maximum amount of housing deduction he can claim on his tax return, apart from his exclusion of 105,900 for his employment income. So finally, once you add his maximum foreign earned income exclusion of 105,900 and his housing exclusion of 23,056, you get a total of 128,956. If there are any deductions which are reducing your adjusted gross income, that needs to be removed from this calculation. In our case, it's 0. So the IRS will not allow you to take double benefit. The expenses which are directly paid from your foreign excluded income will have to be removed from the exclusion. Our taxpayer does not have any deduction against his adjusted gross income, so line 44 will be 0, and line 45 would be the maximum foreign earned income exclusion, including housing exclusion, which will be reported on line 9. So that completes your form 2555. This is one of the most important forms to complete for an US expat. If he is relocating to a high tax country, you need to check out the benefit of foreign tax credit. Now, foreign tax credit reduces your US tax liability dollar to dollar, and at times that could be more beneficial than claiming foreign earned income exclusion. Another thing to remember is that once he claims foreign earned income exclusion, that continues till his end of assignment. It's not that 1 year he can claim, another year he can't. He can take foreign tax credit, and a year after that he's going to again take foreign earned income exclusion. It doesn't work like that. Once he does not claim on a single tax return, that foreign earned income exclusion is basically revoked, and once it's revoked, he won't be able to claim for at least another 5 years unless he takes a permission from the IRS. So that's it. I hope you liked the video. If you have any questions regarding this video, please hit the comment section and let us know. Thank you so much and have a great day.